This conference will now be recorded.
Hello and welcome to the EMS Fiscal Reporting Guide training. Fiscal Reporting Guide, we'll also refer to it as FRG. This is a presentation that's dated August 15th, because that's when we started doing some in-person trainings. However, today is September 4th, and we thought we would record a version that could be shared for any of those that missed those in-person trainings, or to be a refresher. Also, whenever there's turnover, someone that's new to a position, they would have this training available. So welcome. All right, so a little bit about me. My name is Kendall Woofenden. I'm an internal audit. I'm within the Department of Health. I'm part of the internal audit team, and I've been an internal auditor for about 6 years. The last 3 years or so, I've helped the Bureau of EMS with their with some audits on the financial reporting guides, and over the course of those 3 years, we've made some recommendations to the Bureau. They've made some changes to the form. We believe these are good changes. Hopefully you like them as well. It's a much simpler form than it used to be. Now, as far as the FRG, we've had people ask what's the big deal with these? What are they using these for? And it's used to gather financial data on your EMS activity for the entire state so that the Bureau can use that data to inform them on how to set rates. We are one of the few states where there's a rate setting process for the entire state, and they set a maximum limit of what you can charge per transport. So that's what the data is used for. What we'll be covering today is some common questions we get during these audits. People that call and ask about the questions, how do I fill out this form? We're going to talk about allocation, some method ideas, and some examples. And that only applies if you combine EMS and fire activities. Many times there's agencies that just do EMS, so allocation's not as needed there. We'll go over things to consider as you're completing the form, and this will be a chance for you to ask questions. Feel free to jot down questions during this presentation. If they're not covered, feel free to reach out, and you can contact the Bureau of EMS. You can also contact me. My email will be on the last slide. Also, I believe the Bureau will be making these slides available as well as this presentation. But anyway, let's jump into this form. This is the new version of the form. There's a couple things have been changed just before we start off. You'll see total ambulance revenue collected. We changed the wording a little. Some agencies were a little confused when we used the word collections. They thought maybe this was just people that had gone to collections. That's not the case. We want to know everything that you've received, what you're booking as revenue. We've also, as far as who should complete the form, we recommend that it be someone that is familiar with your financial statements, maybe that helped prepare them. And we've added a part to the form that hopefully will remind you that, someone that, like an accountant or financial staff, someone that helps with the financials that way. We also recommend somebody familiar with EMS to assist, particularly when it comes to allocations, which we'll cover later on. Typically, accountant, finance person may not know what percentage use a certain expense is for fire versus EMS. So it may be something where these two individuals or more work together to make sure that the form is completed correctly. But the accountant or finance person would be who is signing off on it. What about our third-party billing company? In the past, we have seen third-party billing companies fill out portions of the form. We don't recommend that just because they may use a different method of accounting. They may use cash versus accrual. It may not match up with the method of accounting that your agency uses. However, perhaps for the number of transports, that is a number that you might be able to get easily from your own software, but certainly you could inquire of your biller to give you that number. But any revenue that they collect for you or any fees that they charge you, that is already going to be part of your financial software. It's already going to be included in your financial statements. All right, what if our categories don't match specific line items? They aren't meant to be set in stone. They are meant to help as far as just getting the right information. There also are custom other lines, 1 for income and 3 for expense. You can certainly use those and then fill in what that other is. You can also combine similar items. So for instance, something like a utilities expense, might be broken out in your financials, but for the purpose of this, you could combine it with administration and overhead. And, just as long as it makes sense and it fits. Now, as far as categories not to combine, we do recommend a couple of things. One is the EMS grant revenue. So we've added to the form Utah EMS, just so that it's clear. We don't want federal grants here. This is a easy thing for the Bureau to look at. They can see what you're reporting here and just make sure it matches what they awarded to you. Another one is the Medicaid assessment. This is the total of all 4 quarters. This is for the whole year, what you paid to Medicaid. And it's an easy number, again, that the Bureau could look at and they could see if it matches what their records show. While we're talking about the Medicaid assessment, this is something that is sometimes listed as an expense on your financials, and that's easy enough to include in your expenses here, but sometimes it's part of revenue. It can be a reduction of ambulance collections or billings, what accountants call a contra account, a reduction of revenue. So if it is a reduction of revenue in your situation, just report it as if it were an expense. It may look like your revenue is now overstated or larger than it should be, but your expenses are now increased to offset that. So really it should be, it all works out in the net. Question we get sometimes, do I need to include depreciation? And the answer, at least as of now, is that no, it's not required, but you may want to. There is an income limitation, and what is that? It is 10% of your gross revenue. That's what you're limited to on here. We'll run through an example. That income limitation used to be the lesser of 8% gross revenue or 14% of average assets. However, Because average assets is something hard to get to, especially if you have shared EMS and fire assets, you're working with trying to allocate those, and the Bureau decided to simplify this and limit it to 10%. So let's look at an example. These numbers I've just filled in, totally made up form here. Say your gross revenue or total revenue, as we call it on here, is $1 million. That means that the net income on the FRG is limited to 10% of that, which would be 100,000. But you can see in this case, it's not. This one is over the limitation by $143,000. And the form has been updated so that cell of net income or loss will actually highlight in red if you are outside of the 10%. So actually, when you're completing this in Excel and you're filling in your revenue amounts, before you put any expenses in, it will highlight red as if you're out of compliance. And then as you fill in your expense items, hopefully you'll see that red cell go away. It won't be red anymore. However, if it still is, you may want to include depreciation. And again, just the EMS depreciation. So there will be likely an allocation there, and we'll go over those. Okay, so as far as allocation, when we audit this, we look for a reasonable and consistent approach. And meaning it should make sense, it should be reasonable for your situation. And then we want to see something that's being consistently applied. It doesn't mean you can't change methods from year to year, but we would hope that there's a reason for it. And hopefully that you can stick with a method and have it be more consistent. Different allocation methods might make sense for different types of expenses. So we've got salaries and wages, maintenance and supplies, admin and overhead, depreciation. Any of these kinds of expenses, they might all use the same method. You might have a different method for each one. You might have the same method for 2 or 3 of them, or whatever. The point being is that the allocation method needs to be something that makes sense for your agency and for that specific expense. So let's go over some methods. One that is very common is a ratio of how many calls come in for EMS versus fire. So let's say 76% of your calls are for EMS, and you would take whatever expense you are allocating. In this case, salaries and wages is our example, and you would put 75% of what that expense is. 76% would be on the FRG. Another method that we've seen used is the number of vehicle bays in a building. So say you have 5 bays, and 3 of those bays are dedicated to EMS vehicles. That equals 60%. So, in this example, maybe it makes sense to use 60% as a method to allocate something like utilities expense. Specific items. This is an example from depreciation, but it could be applied to others. In this case, some equipment is 100% EMS, some is 50, some is 20, some is 0% EMS. And you would just go through each item, give it an allocation, and then multiply that to each item. Another example with this one would be employees. You may have a scenario where a certain number of employees are dedicated to EMS and they are in your financial statements part of salaries and wages for EMS, and other employees that are dedicated to fire. And then you may have some that are a shared cost. Maybe a director or a fire chief might be 50-50. And in that case, you would use a specific items approach to take the specific employees and allocate those at 100%, but then any employee that crosses over or is a shared employee would be allocated and part of both. And only the EMS is what we want to see on the FRG. Number 4 is other. So we've got these 3 methods above that EMS, the Bureau, has approved. 4 just is any other reasonable approach, and you just need to get approval from the Bureau. So there are other reasonable methods out there. One method I've seen is, say you've got several fire stations, each one is staffed by a certain number of EMS employees and fire employees. Maybe it makes sense in your case to use the ratio of EMS versus fire employees for each facility, whether you're doing depreciation or maintenance and supplies, whatever applies to that facility. Again, the key word is reasonable, and it just has to be approved. So, question, can the FRG tie to your financials? Well, it can, but usually it's not going to tie directly. So in this example, well, we'll go through it in a second here. But what we are meaning when the form says must tie to your financial statements isn't that it ties number for number, but that the numbers on the FRG do tie to the underlying data that's inside of your financials. So on this, we've got some made up numbers from a financial statement, budgeted versus actual. We've got charges for services of 4.9 million. In this case, we know this is going to include more than just ambulance transport fees. Not sure exactly what all those fees are, but ambulance is going to be part of that. And on the FRG, that's what we would expect to see. It's just the ambulance numbers that are going to be represented here in your financials. When it comes to expenditures, you can see the public safety section. We have police, we have fire. We don't have EMS listed because it is combined. And so obviously there would need to be some allocations to separate the fire and EMS expenses. So obviously that number from your financials won't show up as a total expenditures in the FRG. It's just going to be a portion. We also want to let you know that the Bureau has changed their due date. It no longer is 3 months after your year end, whether you use a calendar year or a fiscal year. The due date has increased by 6 months. That way you can use your audited financial numbers, and you won't need to use pre-audit numbers for that. And then we want just to remind you to use actual amounts, not budgeted. We just are showing a snippet of what might look like from your financials. But yeah, we want actual numbers. All right, so here's an allocation example. And because we've got an allocation, this just points out again, the number in your financials is not going to match what's in the FRG. We've got different types of allocation methods being used, and it made sense for this make-believe agency to use the same method for the top three, and then a couple of different methods for maintenance and supplies and admin and overhead. So again, you can use the same method for all. If it makes sense, you can switch it up. And then we've got Medicaid assessment. That's obviously going to be a 100% EMS allocation. And then it's just stating here on the slide that sometimes it's a reduction of revenue on the financials, but when it comes to the FRG, we do want it to show up on its own expense item. Okay, so this is our last slide before we get to the end, and it has my contact information. So our last example, we just want to show that, here's how you might do a depreciation. You've got some ambulance 3 and 5 are fully depreciated. You've had them a long time. You've already deducted all that expense. So obviously they're 100% EMS allocated, but 100 times 0 is still 0. You're going to see how these each have a different percent allocation. So we've got Fire Station 1, we're using 60% versus Fire Station 2 is 25. Again, perhaps this is because the number of bays at the fire station, perhaps it's because of some other method, but we've got a different, EMS percent that can be applied there. Now you'll notice fire trucks on here, which you may think those aren't EMS vehicles. Why would you have those allocated at 20%? Now, as far as the allocation amount, we're not sure what method they're using, but for some reason they're using that. But depending on the situation, the number of staff you have, it might be, perfectly reasonable to allocate some of the costs, whether it's depreciation like we're doing here, whether it's fuel, maintenance, or these other costs of using fire trucks. They might be being used as EMS vehicles. And so it could be perfectly reasonable to include a slice of those expenses on the FRG somewhere. Now that pretty much covers what what we've presented. We've gotten some great feedback from individuals that have attended our trainings. So we'd like to say thank you for attending those trainings, and then thank you for listening in. And if you've got questions as far as this online training, you can reach me at the email address kendallwuffenden@utah.gov. You can also contact the Bureau and either by phone or email for any additional questions. I believe we've covered everything. Again, feel free to ask us questions, and thank you for tuning in.